Yeah.
Hey, what's up, everybody? Welcome to Ala's World of Finance. I hope you're all having a fantastic day. Today we've got a pretty interesting video. So we're going to talk about AT&T stock. So this is a stock that you guys actually requested. So we're going to analyze AT&T, ticker symbol T. And remember, if you guys ever have a stock that you want me to analyze, make sure that you bombard me with comments and just let me know that there's a stock that you want me to analyze. And if I can just ask for one thing though, please try to make it at least somewhat of a trendy stock so that at least some people have heard of it. So then the video will actually get some views and different people will benefit from it. So anyway, thank you for tuning into this video. So what we're going to do is we're going to go over AT&T's business. We're going to go over the numbers and their performance and their balance sheet. And we're also going to cover their pros and cons. And at the end, I will give my overall summary and conclusion, and I will give it a rating. So again, this is all just my opinion, but the way that we're going to do this is, so this video, we're bringing back Ala's World Consensus. So I'm going to ask you guys to leave a rating as well after you're done watching the video. And the way that we're going to rate this stock is you guys can just leave a comment in the comment section below and just give it a strong sell or a sell or a hold or a buy or a strong buy. And just to break these down, strong sell would be that you want to just, you have to get rid of the stock immediately. The stock is going to tank and you need to get rid of it. Sell would be you're not very confident in the stock, you don't like the way that it's going, and you'd be more comfortable just kind of getting rid of it, and you definitely wouldn't be investing in it. Hold would be that you don't necessarily want to sell any of your position, you don't want to add any more to your position. You may not even be invested in the stock, but you don't really see it either way. You don't really feel like picking up any. You don't think that other people should sell. You're just kind of at a neutral position there. And then buy would be that you think that it is a good stock. You still may not even pick any up, but you could still give it a buy rating, just saying that it's a good stock, and you could see why investors would want to invest in it. And if you do own stock in it, then maybe you would just maybe you would add a little bit more to your position, but not too much. And then a strong buy would be that you have to get into this stock. This stock is about to take off. You want to invest in it. So if you're not invested in it, you would definitely want to invest in it. And if you're already invested in it, then you would want to add to your position. Okay, so maybe it dips and things like that, and you want to keep adding to your position. So a strong buy would be that you're very bullish on this stock. Okay, so like I said, at the end of the video, please give your rating. And at the end of the video, I will give my own rating as well. And so we'll go from there. So anyway, let's go ahead and get started here. So looking at AT&T's business, let's go ahead and look at their company overview. So AT&T Inc. is a holding company. The company is a provider of communications and digital entertainment services in the United States and the world. The company operates through four segments: business solutions, entertainment group, consumer mobility, and international. The company offers its services and products to consumers in the United States, Mexico, and Latin America, and to businesses and other providers of telecommunications services worldwide. It also owns and operates 3 regional TV sports networks and retains non-controlling interests in other regional sports networks and a network dedicated to game-related programming, as well as internet interactive game playing. Its services and products include wireless communications, data broadband and internet services, digital video services, local and long-distance telephone services, telecommunications equipment, managed networking, and wholesale services. Its subsidiaries include AT&T Mobility and Sky Brasil Serviços Ltda. So anyway, so that's their business. So now let's take a look at their stock. Looking at their stock, they have a $222.6 billion market cap. They have 6.1 billion shares outstanding. They have a dividend yield of 5.41%. Might actually be a little different, but we'll talk about that in a second. Quarterly dividend of 0.49 cents, which is good. And they have a trailing PE of 17.71. I think their estimate for this year is a lot lower, so we'll talk about that. EPS is at 2.05 for the trailing 12 months, which is good. And when looking at their dividend here, they have a current dividend yield of 5.36%, which is very good. It's actually outstanding. And the technology average is 1.3%. But you have to keep in mind that the telecom services industry or sector, they actually usually pay the highest dividends. So just keep that in mind. That sector is usually very good for picking up dividend stocks. Although I think T-Mobile doesn't pay a dividend. I think T-Mobile does not pay a dividend. But anyway, looking at the payout ratio here, it is at 67.1% of the $2.92 EPS, which means that they'll have a little more than 30% from that payout ratio to reinvest, which is good. And then their dividend growth is 32 years. So that is 32 years of consecutive dividend growth, which is outstanding. So they have a very good track record with dividends. And when looking at their dividend history, let's look at it here. So the annualized growth for the last 3 years is 2.2%. So that's good. And then annual growth of 2016 is 2.1%, which is good. And when looking at their performance here, so their performance is actually really bad. So looking at their 5-day performance, it's down a little over 2%. 1 month, it gets even worse. 3 months, it gets even worse. Year to date, it gets even worse, down almost 15%. And 1 year performance, it's down over 15%. So we've seen a lot of stocks do very well this year. AT&T has been on the opposite side of that. They've been going down. Looking at the analyst ratings here from MarketWatch.com, we have 28 ratings, average is hold, and we've got 6 buy, 3 overweight, 18 hold, 0 underweight, and 1 sell. So it's actually not that bad because there's no ratings here on underweight and there's only 1 rating for sell. So the ratings are actually not that bad in my opinion. Okay, let's take a look at their PE ratio. So they've got, and this is from Nasdaq.com, it looks like their estimate for this year is at 12.4 for the PE ratio, and the industry looks like has a negative 0.10. But if you look at earnings growth, AT&T has a 2.7% earnings growth, and the industry, it looks like the wireless industry has a 9.8% earnings growth. So obviously you see a lot more earnings growth for the industry versus AT&T, but AT&T does have a much better price to earnings ratio estimate. Okay, so let's look at it here. So now looking at their PE ratio a little bit more, their 2016 actual was 12.97. 2017 estimates are at 12.61, so it went down. 2018 estimates, it goes down even more to 12.28. And in 2019, it goes down even more to 11.84. So price to earnings ratio is actually looking pretty good in my opinion. Looking at their earnings here, we can see that the last 4 quarters have just been pretty much stable. Hasn't been going up, hasn't been going down in terms of estimates. It's just pretty much stable. And we can see that the last 4 quarters, when looking at the percent surprise for the quarterly earnings, they're all 0 across the board for the last 4 quarters. So nothing too exciting there. It's just, it is what it is. And when looking at their balance sheet here, so let's take a look at their income statement. Every year, so for the last year, 2016, their total revenue was over 163 billion, which is very high, and it's been increasing every year. But cost of revenue has also been increasing every year, and it's over 76 billion for last year. But their gross profit in total has been increasing every year, so gross profit is very good, and it's been increasing at over 86 billion there. And when looking at their balance sheet here, so looking at their cash and cash equivalents, they have 2016 over 5 billion, getting close to 6 billion there. And when looking at their total assets, taking all of their assets into account, they have over $403 billion there. And then when looking at their liabilities, you have total liabilities of over $280 billion. So, and by the way, their total assets is very high. I mean, that's probably higher than Apple. But their liabilities is probably also higher than Apple. So when looking at the ratio of assets to liabilities, it's not even like a 2-to-1, but I guess it's getting kind of close there. And the thing that I also look at here is the cash. Cash is not that high, to be honest, and you can look at the short-term and long-term debt, and that's decently high. I mean, short-term debt over 9 billion, getting close to 10 billion, and then long-term debt is over 113 billion. And then you also have to remember that they are looking to acquire Time Warner, and that I think that was like $85 billion also, so you'd have to factor that in as well. So anyway, so that's that. Now let's move on here. So I just want to take a look at some of their competitors here really quick. So and these numbers are from MarketWatch.com. They're a little different than Nasdaq.com, so just keep that in mind. But AT&T's performance here, 1 year performance down over 15%, and then MarketWatch lists their PE at 17.79. Well, looking at T-Mobile, a lot of people put AT&T against T-Mobile because T-Mobile has been doing a lot of extreme advertising and deals and discounts and kind of stealing some market share, so they put them up against each other, and they've been performing very well. So T-Mobile 1 year performance is up over 37%, but their PE ratio is at 32.17. So looking at it just from a valuation standpoint, I think that AT&T has a PE ratio that is almost half of T-Mobile, and AT&T pays an outstanding dividend, whereas I don't even think T-Mobile even pays a dividend. And on top of that, T-Mobile stock is all the way up here while AT&T is at a huge discount. So from a valuation standpoint, I like AT&T more. Now, Verizon, their one-year performance is down over 21%. Their PE ratio is at 14.52, even lower than AT&T. And then Sprint, one-year performance is up 71%, so very high, but they're not profitable. Now, a lot of people think that the telecommunications market is struggling, and then it's a bad market. But I don't know if I necessarily agree, because I look at AT&T's cash flow, and I look at T-Mobile's performance, and I think that there's definitely a lot of cash coming in. It's just, right now I think the market is favoring more T-Mobile, but that could swing back to AT&T's favor at any moment. And right now, you'd be getting AT&T at a discount. So anyway, that's just something to consider. Now, let's look at some pros and cons and some recent news. So we'll kind of start off more on the negative side here a little bit. But looking at it here, so mobile data traffic continues to increase, and there are no signs of slowing down. And a lot of reports are saying that a lot of these carriers are struggling to handle the extra traffic. I don't necessarily know why that would be a bad thing. I think extra traffic would be good, but I mean, you obviously have to be able to handle it. So as long as they can improve on that, it should be good for them. Now, something to consider here is that AT&T continuously has to keep increasing their special deals and discounts and freebies and things like that to compete in a saturated market. Because what's going on here is that we have a saturated market, which equals more options, and when you have more options, you're going to have more competitiveness, and all these different companies are going to be offering more deals and discounts. We see that a lot from T-Mobile and Sprint especially, and that's going to put pressure on AT&T to do the same, which they're doing, and that will hurt margins. Okay, so that can lower margins, and so that's something to consider as well. Now, they're consistently losing access lines, and part of it is because of VoIP, which is voice over internet protocol. And they're also getting even more pressure from cable companies who can offer double plays and triple plays, where you can do like cable TV, internet, and you guessed it, voice, right? So all those different things. Now, AT&T does combat that in their own ways, and they're also trying to acquire Time Warner, which if that goes through, that will really help them out even more. And we're going to talk about that in a second as well. But we're still still looking at some of the negatives here. Now, they're also having some labor disputes with DirecTV. Like they acquired DirecTV, and they're having some disputes with those union workers, and it's Communication Workers of America, and they're having some contract disputes and things like that, and that's kind of a setback. So when looking at it here, just kind of summarizing their cons here, we've got heavy competition from a saturated market with huge players like Verizon, T-Mobile, and Sprint. We've got AT&T struggling with loss in access lines, operating expenses, marketing costs like discounts and freebies, and even some union issues. All of these things can definitely affect AT&T's growth. Okay, so it can affect their revenue, and it can affect their margins, and it can affect their growth. So it's something to take into account. Now, another last thing here is that Zacks downgraded AT&T to a sell rating on July 11th. So I don't know, just take that how you will. Okay, now let's start talking about some pros. So looking at the sector here, I definitely think that the sector is a little bit oversold. So looking at this chart here of performance, you can see that the S&P 500 is definitely up. It has it listed there at 9.85%, but then it says 8.74%. And then telecom services, the line shows 15.55%, but then up on the top it says 11.65% down. So there's definitely a huge difference in telecom services performance compared to the S&P 500. So that's something to consider. I think it's definitely being oversold. Now, when looking at the sector fundamentals, PE ratio, they have it at 21.99 for last year, and then this year's estimate is at 19.87. So AT&T's is significantly lower than that sector. And when looking at the dividend yield, it's at 4.44%. We talked about how that sector has a very good dividend yield, but AT&T's is actually even higher than that. So AT&T has an excellent dividend yield. Now, when looking at their stock performance here, and we're looking at their resistance and support levels, looking at a 200-week moving average, we can see that there was basically a resistance at around $36. Okay, around $36 basically had that resistance line. And when AT&T broke that line, it basically turned into a support level. Okay, so now you're talking $36 is kind of the support, and we're kind of testing that right now, right? We're pretty close to that. I forget what the stock price was, but it was like 36 something, right? So we're kind of testing that right now. So it could definitely bounce back. Now, if it doesn't bounce back, if it breaks the support and say it continues to go down, which of course it could happen, but if that happens, then I think that you might be seeing a lot of shorters, probably cashing in, and you would probably see a lot of value investors coming in and picking up AT&T at a very discounted price, especially if it continues to drop, that pays a very nice dividend. Okay, so all things to consider there, keep that in mind. So I think investing in AT&T is a great idea if you want a discount and a great dividend stock. The stock is around 17% down from the 52-week high. Their dividend is more than double the average yield of the S&P 500. The $85 billion acquisition of Time Warner could help AT&T diversify, and we know that they've been facing very hard competition from T-Mobile and Sprint, and this will help them diversify and help them with revenue in that sense. And with Time Warner, AT&T will also have better opportunities to sell bundles. We talked about it before, right? Double play, triple play of internet, data, or internet and data is the same thing, but like data, cable TV, and access lines and voice and things like that. So that's really good for them as well. And on top of that, the Time Warner acquisition will also help AT&T strengthen their DirecTV Now streaming service, which AT&T has basically said in the past that that's their answer to the general public cutting ties with pay TV like cable. And this will bring a wide variety of content to the streaming platform. But to be fair, you have to keep in mind that that is a very competitive market as well, with Netflix, Hulu, Google, Amazon, etc. But still, I think still a positive, something to definitely think of there. Now, analysts also say that Time Warner will help AT&T with targeted advertising. I couldn't find exact figures on this, but if you just look at what Google and Facebook do with digital advertising, they control around 90% of the market as a duopoly, basically. And I'm really sure that AT&T could generate a huge amount of revenue if they can properly execute and if they can steal some of the market share. So I definitely see it as a plus. And that isn't even mentioning all the other benefits you get from Time Warner, like Warner Brothers Studios, and we see everything that's happening with DC and like the Justice League movie productions, big productions, things like that. So it's just another great way of AT&T diversifying more. And AT&T is also making progress with 5G, and they're looking to launch that in the next 4 years. And they're already planning to run test runs this year with their DirecTV Now platform streaming service running on 5G. So I think that's great. Now, the last thing that I just kind of want to mention really quick is that some news did come out this weekend about Time Warner, and I guess there's some politicians and stuff trying to block the deal. I don't really know too much about it, but I'll just kind of give you a quick little summary on here. It says, from this report that I was reading, it says, Democrats have been trying to convince the Justice Department that the merger poses serious harm to consumers. They argue that AT&T will have the ability to promote Time Warner content like HBO programming or Warner Brothers movies over that of competitors and restrict other cable and internet providers from accessing that content. So, okay, one last thing I want to mention here is that it says a combined AT&T Time Warner would have both the ability and the incentive to increase viewership of its newly acquired content by restricting AT&T subscribers' access to other content or otherwise prioritizing its own. A group of 22 Democratic senators wrote in a letter to Sessions last month. Okay, so anyway, it just kind of looks like some politicians want to kind of block this deal. I don't know if it will get blocked or not. I don't think it will get blocked, but it's something to consider, and we'll see if the stock gets affected at all on Monday or if it goes down even more or anything like that. But if it does go down, might just be an even better discount. So my overall opinion, so if I was forced to give it a rating, I think that maybe I'm leaning a little more towards buy. Again, just my opinion, but I almost wanted to give it a hold rating, to be honest, just because I feel like I don't understand the company and the business and the market enough to really give it a buy rating. But I'm being a little generous here and giving it a buy rating because they have an excellent dividend. The merger with Time Warner could be a huge potential benefit to them, and it could really help them diversify. And AT&T is at such a discount right now. I mean, their stock has been underperforming like crazy, and their PE ratio is outstanding, and it's much lower than the S&P 500 average. So I think that they still can make some moves, and they can still have some growth, and I think it's still just like it's a value stock. I think it's a value stock with great dividends that can still have some growth if they do all the right things. But we also know that video subscribers continue to decline, and the cable industry is struggling also. So those are things that AT&T definitely does need to combat against, and they do have plans to make up for that. But what really interests me is the upcoming earnings call. I would love to listen in on that. I would love to hear what they have to say, how they're going to be adjusting and how they're going to be making moves, and that would really help me understand the business more in the market. So I suggest if you're interested in AT&T, you should definitely listen in on their earnings call. But overall right now, I think I'm leaning more towards a buy rating. Not a strong buy. I'm not investing in them yet. I may in the future, I'm not sure. But right now, I'll give it a buy rating. I think hold is maybe a little harsh because I think it is definitely a value stock. I mean, it's a little undervalued in my opinion. So that's kind of, but there's other stocks that I like more at the moment, so that's why I'm not investing in it, but I think I would give it a buy rating. So anyway, what do you guys think? Please leave a comment below and give your rating. Remember, it's strong sell, hold, buy, or strong buy. And I will have the results of that poll question in the next video. Okay, so anyway, I just want to say thank you guys so much for watching. I hope that you enjoyed the video. I hope that this helped you in some way and that you found it useful. And I want to say thank you for always watching my videos and always hitting the like button. That really helps me out a lot. Every time you guys hit the like button, it really means a lot to me. I always check and it definitely means a lot to me. So anyway, thank you guys. And if you're new, please subscribe. If you liked the video, hit the like button. And if you watched the video all the way through to this very moment in time, then you are, I'm going to say that, you know what, I'm going to say that you're AT&T because I think you are undervalued and you guys pay a great dividend by watching my videos. I don't know. So anyway, all right. Thank you guys for watching. I hope that you all have a wonderful, beautiful day and you take care.